Hit start recording. It's fine.
Yeah, I got it. Okay, everyone. Hey, well, thank you for all coming on to Andrew's Zoom call today. I'm Brett Borkin with California Title Company. I've been working with Andrew for going into 20 years now. I have a special guest with us as well. Bill Thomas is our advisory title officer, county manager, and I think he's got a couple more titles in there that I always forget. But today we wanted to talk to you guys about Proposition 19 and some of the new changes that have gone on within some of the tax code for property taxes. And Bill, do you want to jump in a little bit too? And I'll get ready to share the screen.
Yeah. So as of January 1, actually I shouldn't say January 1 because Proposition 19 didn't really take effect yet and in full, but it's the part of it did on February 15th. So last year it was voted in by the state of California voters to enact Proposition 19. And two main things happened with Proposition 19. One, the parent to child, grandparent to child, or vice versa, child to parent, grandchild to grandparent exemption changed. And that actually changed on February 15th. So previously you could transfer any property that the parent owned to the child and get an exemption up to about $1 million tax exemption. That changed on February 15th, whereas you can still get that exemption, but the child or the grandchild had to make the home their primary residence. So that was a big change. It was a tax tax credit that people enjoyed for many years, but that got changed. So that was kind of a harsh change in reality with respect to Proposition 58. But the good thing that's going to happen out of Proposition 19, which won't go in effect till April 1st, is the replacement dwelling is going to expand. Before, there was only like 10 counties that participated where you can go from one county to another. You virtually had to stay in one county. The whole state of California is going to participate in this now. So it's going to change. Prop 6090 is going to change to where every single county through the state of California is going to accept a replacement dwelling transfer. And basically what that is currently the way the law is if you actually sell a piece of property and buy a piece of property for equal or lesser value, you will get the tax exemption base of your current property that you're selling. That's going to change on April 1st, where you can actually upgrade a purchase. So you can sell your property at maybe $1 million and then purchase it at $1.5 million, and you still get the tax credit for the $1 million on the purchase, but then the $500,000 gets taxed and added on to the tax value based on current tax value of the property at $500,000. So you're still getting the credit, but now you can actually buy a home at not just equal or lesser value. You could buy it at greater value. And it used to be only a one-time. Used to be only a one-time exemption or transfer that you can actually get a credit for. Now you can get it up to 3 times in your lifetime. And they are expanding on that with individuals that are actually handicapped, or that you can have a replacement dwelling with that, or if you had a structure that was actually damaged by a natural disaster, fire, earthquake, whatever, but the governor has to deem that area to be a emergency disaster area, and your property has to be damaged for more than 50% of value to be able to get that credit. But these are the great credits that Proposition 19 is adding to Proposition 6090. So those will go in effect on April 1st. And if you have questions on that, I really implore that everybody talk to their accountant. We're only speaking of terms of the law that was posted in the state of California that we retrieved. So I think it'd be best at, to get all the particulars to make sure you get the proper credit is talk to your accountant or your attorney to make certain you qualify and you get the best credit on that. So I hope I put that in a real, simple summary. There's a lot of components to it, but those are the, it's a kind of a summarized, brought down, summarized version of it.
Yeah. So what this does, everyone, is basically a lot of you guys have thought about selling your property, but you have your property taxes based on when you bought 20 years ago. For an example, John Musso did my loan 20 years ago when I bought a property, and Andrew was my agent. And my tax base would be, based on, 20 years ago. A lot of people don't want to sell because they're stuck within that tax base and they wanted to upgrade a house, but they couldn't because it would have to go to equal or lesser value. What this does is it gives everyone an opportunity to actually move up in value. So I think that's going to help get a lot of activity going on in the market because it's going to open up the floodgates for people that have some money. They've been living in a home for 20 years. Now they have more money in their life and they want to buy a $1.5 million house, as this example shows. So they're able to transfer that original $1 million, basis over and then just pay the difference between the million and 500,000. So I think it's a great thing that we're seeing a lot. Now, with the pay for this thing, as Bill mentioned, to pay for this, tax break that people are going to be getting is they took away the grandparent to grandchild and parent to child, tax base if it's not a primary residence. And last week, Bill and I were seeing a scramble, and I've been seeing a scramble since January of everyone going, "Hey, Brett, I want to transfer my property into my kid's name. How do we do this? I want to avoid the taxes. What do we do?" So there was a pretty big mad dash up until just last week. On the 12th of February is basically the last day they could have done it because of the way the recordings went. So everyone was scrambling to try and get documents recorded. And with the county being closed for walk-ins, it was difficult to get everyone in. So a lot of people did do that. And those that missed out, unfortunately, if they do inherit a property, if they don't move in, they're going to be reassessed is basically what's going to happen. So that's the downside. But that is going to help pay for the upside that we're going to see with the increase in value step up that you all could do. So, any other questions on that so far? Okay.
So,
yeah. So it's
Brett.
Yeah.
Brett. In addition, there were three parts to Proposition 19, and the third part, realistically, was that some of the values that were, or I should say, the tax credits that went away, or the increase with respect to the Prop 6090, some of the monies that were going to be made on that were going to be shared with firefighters and the prevention of wildfires through the state of California. So that was the third part of Proposition 19. That's going to be a great, thing for the state of California. There's a lot of logistics to that. If anybody wants to read that, we do have a flyer to that effect. But that is what part of the Proposition 19 is. It has, like I said, three parts, and that's the third part to it.
Yeah. Yeah, it's so you've probably all heard about before, like Proposition 60 and Proposition 90. Proposition 60 was letting you transfer within the same county, and Proposition 90 lets you transfer outside of county. And Bill mentioned the 10 different counties. So this sort of takes away those two propositions and allows it to go all across California. It doesn't matter what county it is. So it simplified it as well. It seems to, right, Bill? Don't you think?
Yes, it did. And, one of the other things it did, I think they realized, legislatures to the state of California realized that, home values have gone up. So to buy equal or lesser value for someone who's, at that level of age, it may not be practical. So they allowed the actual exemption to go on, or the proposition, I should say, the transfer exemption, go on to properties that are worth more than what they actually sold their previous property for. So that was another thing that I think they were looking at to try to help out the community.
Now, Bill, I don't know the answer to this, and I was looking for it. With the old propositions, you used to have up to 2 years to do this. How is there a time frame now on this?
No, same time frame. That's going to remain. So that
Okay.
will still remain. Those aspects will still remain.
Okay, all right, great. So, anyone have any questions we can try and field for you a little bit? I mean, once again, we're not CPAs, we're not tax attorneys. We're just interpreting what we see from the actual assessor, as well as California Land Title Association, CAR. Everyone's put out some briefs on this thing with FAQs. So we're just interpreting how we see it. And we've talked to the county a couple of times about this thing. I talked to the county last week about a situation that they were about to miss the cutoff, and it was going to be the 16th of February for the transfer from grandparent to grandchild. And they were saying there might have been a couple days leeway on this thing. There's no real set stone. With COVID, it's hard to get a hold of people. So nothing was set in stone as of last week on that transfer date. But in all sense and purposes, it was supposed to be the 16th of February. So, and then so I mean, that's sort of what we want to talk about today about with this. It's a new thing. You're going to hear people talk about it. People might have some questions, your clients, your friends and family. So we have the flyer. If you guys want to reach out to us, we have this flyer we could send you all. It's also on our website. And we try to update our clients on a lot of this moving pieces within our industry. Yeah.
Brett, the flyers would be great. I'd like to actually, because there's been a lot of confusion. I think there was a bad link that was sent out, and I know that there was over 100 calls made for this. Maybe redo this meeting again, just because I know from a majority of my new clients, and I have a lot of clients that are elderly right now. I had one right now that we're listing the property. It's getting listed today. It's in West Hills. They wanted to know they own other property, and I don't think they could have been here today because of the link. And there's a lot of questions, a lot of people that just don't understand it quite,
Of course, we're happy to do it. Yeah, Andrew, I know you and I spoke the other day about that. I mean, it was yesterday about the step up, and there were some questions about the step up purchase. So yeah, we're happy to do this again.
Well, that's another client of mine that I'm competing, I'm competing with another agent on it, and obviously the other agent hasn't really stayed in touch. So, it's just another way of staying in touch with the clients and letting them know what's going on and explaining the steps, because there's a lot of mass confusion, and there's a lot of people that are elderly or want to move up out of their house, want different space, so
yeah,
it would help.
Well, I mean, yeah, for sure. We're happy to do this again. I mean, as you've gone over on these meetings, it's all about your team and teamwork. And before we started recording, I introduced Bill Thomas to John Musso, a lender you work with, and they've known each other and worked together for 20 years behind the scenes. But you have a team that you've established, and it seems like most people that go on these calls are part of your team as well. So we're happy to help in any way that we can to provide information, at least on our side of the industry. And you'd be surprised, a lot of people don't know what title insurance is until they really, really need it. And we get so many questions that people had no idea that that's a sector that we actually could help them with. So, if you guys want to know how your property is held in title, people forget that they took it out of a trust to refinance, and they forgot to put it back into a trust. If you want to know those things, let us know. We could get you copies of your deeds and let you know how actually you're holding title, because a lot of people forget how they're holding title, and you might want to update these things. I know we've had some estate planners in the past on these calls, and those are things that they're probably going to tell you, hey, get me a copy of your deeds so we can see how you're holding title. So we're happy to get those for you. So just reach out to us, reach out to Andrew, and we'll provide that service for you as well. Bill, you got anything else? Anything fun to talk about? Title is such a fun topic. Yeah, title's so fun.
Well, I think we covered that very well, and hopefully we did for everybody. And if you have any questions, we're definitely here to answer any questions.
Yeah. So no questions. Ron, do you have any questions? I know you work with a lot of this type of stuff.
I have a question, actually.
I need to know who the experts are that I can call when I get into trouble, because this is not an area of my expertise, but I'm delighted to know that there are individual professionals that I can rely on. And it would be helpful to me if you were to send me a CV and a little note as to what your expertise is and what you're available to testify to as an expert if called upon in a divorce case.
Well, well, we're not going to be able to testify on tax law. That's for sure. We could probably, I'll let Bill. Bill's our advisory title officer and county manager and title guru. I'll let him just talk about what we can testify on, I guess.
Yeah, realistically, the only thing we're allowed to testify on is title insurance matters. So anything revolving around title insurance, that's realistically the only thing we can testify upon. Anything outside of that scope is not something that we can do. So if you're talking about how a grant deed or a quitclaim deed impacts the real estate involved in the title insurance, then that's something we can opine upon, or testify upon. But realistically, to actually give testimony for something with respect to a divorce, maybe in depending on how we view the court orders or whatever with respect to how we would handle it in a title insurance matter, that we could do. But beyond that, I don't think we can go anything further than that.
Yeah, we just had a question from Agnes really quick. So Agnes wants to know what happens if a property originally purchased for $500,000 now is worth $2.5 million, is transferred to a grandchild. What happens to the property tax? Well, Agnes, if they're going to use it, if the grandchild's going to use it as their primary residence, nothing. They're able to keep the tax basis. If they're going to rent it out, it's going to increase in value. The property taxes will go up to current market value. So hopefully that answers it. And then Kevin, you had a question too, right?
Yeah, I don't know if I missed it in the beginning or not, but for Prop 19, as far as like, do you have to be over 55 or can this apply to anybody? That's my first question. And then the second question is, if somebody hasn't bought a property, if the age does count, if somebody hasn't bought a property up until 55, let's say somebody bought their first property at like 58, for example, how does that work? If they want to sell in a few years and then, take advantage of the Prop 19.
Yeah, you do have to be 55 years old or older, and it doesn't matter if you were 58, that's fine. You can still transfer it. The point though is if you at 58 when you buy it and then you sell at 60, the value increase is not going to be that much. So it's not the biggest deal. It's more about when we bought a house 25, 30 years ago and we saw huge increases in value. That's when you want to really take your tax basis. But you could do it up to 3 times. So why not do it at 58 if you sell it at 60? Why not? There's no harm, no foul.
I do want to make a comment to that, Brett. They did with Proposition 19, part of the change, if someone's severely disabled, that you don't have to be 55. So that's one of the provisions they added into it. And then if your property has been damaged through a natural disaster over, and it's been severely damaged over 50%, and you get that from the governor in that area, that's the other time it can apply. But if you're not in those 2 brackets, then you do have to be 55 or older to be able to benefit from that transfer.
Bill, let me ask you, I'm sorry, I have a paper printer going and I couldn't hear that percentage. In a fire, how much does the house have to be damaged so that you can take that with you?
It has to be damaged 50% or more, but yet the governor has to have deemed the area that the property's in as a natural disaster. So you would have to have probably the property red tagged. Yeah.
It can't just be a house.
It could just be probably red tagged, and then the governor would.
Yeah.
No.
It can't just be a house fire in the middle. It's like the Woolsey Canyon fires, those type of things.
Got it. That rules out your own arson for your.
well,
yeah. Set up your tax credit.
I don't advise anything illegal to defraud lenders or
yeah, we're not going to talk about that at all.
My disclaimer.
We're not going to talk about that at all.
Just like working with me, we'll have a successful close.
Yes, we're not going to
talk
about that. Yeah, so that's pretty much it in a nutshell. I mean, it's not the most complicated thing. It's pretty simple once you sort of see the fact sheet and what exactly it details. So it's hopefully we did explain it to you well enough that you understand how to move forward and hopefully take advantage of some of these great things. Or, if you're a real estate agent or, and you want to go and like Andrew, he knows where to go help his clients that have been there for a certain amount of period. He could talk to those clients about this. It's a great thing to maybe generate some activity.
Okay, sounds good. Mike, we're rolling.
Yeah.
You have any questions?
No.
You look very focused today, Mike. We'll talk to you later.
Well, good. Well, I'm glad
All
you
right,
guys
so if there's no questions, anyone have questions for Bill or Brett? Or Ron? Anyone going through divorce? No.
But, yeah.
Want me to say something about?
We'll see how COVID goes.
I can't hear you, Ron.
Ordinary process few people know about and fewer still understand.
Yeah. All righty. All
That
righty.
was a question. Would you like me to say something about that?
Andrew.
You're on mute, Andrew. We can't hear you. You're mute, Andrew.
Unmute yourself.
Andrew,
Ron, I didn't hear the question. There was noise, so excuse me.
I said, would you like me to say something about a unique and extraordinary process few people know about and even fewer understand?
Not at the moment today, and the only reason is because I have to be at a meeting, and this meeting started late. Ron, I would love to give you the opportunity. Ron is a master of divorce, and he has workshops, and he holds every second Saturday of the month, kind of like a Zoom meeting where people can go on, and he discusses the process of the 7 ways of, I don't know if I'm saying it right, of divorce, how to do it. So, but I'd let him talk today, except for we had difficulties. That's why I'm going to redo this again. And I'm sorry for anyone that had trouble getting in.
All right.
But I'd love to do that. Anyone that has questions about divorce or have clients that have questions about divorce, we're going to send out information about everyone that's on this Zoom so that you can contact whoever you want about whatever you want. Like Brett about title, or Ron about divorce, or Mike about his specialty. Mike, you want to talk about you for a quick second? If you can wrap it up in a minute or 30 seconds.
Well, we do a bunch of stuff: plaintiff work, defense, insurance coverage, and some estate planning.
Okay. Kevin's a real estate agent who worked with me for a few years. He's an extraordinary West Side agent, as well as Valley. And I don't know who else is on the call. Agnes is a client, not an old, but client. John is the best, or one of the best in the business, bar none, in mortgages for Citibank. I don't know who else is here, but
I think you got everyone.
on Agnes. Thank everyone that we had from originally, but
right.
We'll post it as well and send it out to everyone, and we'll redo it. And if you need information, Brett's happy to help you. You'll get Brett's information, or Bill.
All right.
Thank you for helping me today.
Yeah, thank you all for coming.
Welcome.
Really appreciate it.
Appreciate it.
I'm gonna have to make it up and get you a title order today.
There you go.
Yeah, get to work.
All
Let
right,
her-
thank you, Ron. And
Bye,
Ron, I
everybody.
promise you next time I'll let you talk, Ron. I'm sorry. I have to run. I got to go get a listing for him to make up for all his time he spent for me.
Okay. All right. Thank you,
Talk to you
everyone.
tonight, you get there.
Thank you, Maya.
Thank you, Bill.
Hey, John.
Bye.
See you.